Hey there, everyone. Welcome back to Pocket Wise Tips, the channel where we help you make smarter, more informed financial decisions. If you're new here, don't forget to hit that subscribe button, because today we're talking about investment strategies for beginners in 2025. Now, if you're just starting to think about investing, or maybe you've been holding off because it feels overwhelming, don't worry, I've got you covered. In this video, I'm going to walk you through some simple, effective strategies to help you grow your wealth in 2025. Let's dive in. Why invest? First off, let's quickly talk about why you should start investing in the first place. Think about this: with inflation eating away at the value of your money and interest rates being low, leaving all your savings in a regular bank account isn't going to cut it. In fact, the average savings account interest rate in 2025 is around 0.05%. That's nothing compared to the potential growth you could get from investing. Investing allows your money to work for you over time, potentially building wealth that outpaces inflation. But how do you begin? Let's break it down with some beginner-friendly strategies. Start with index funds and ETFs, alright? If you're just starting out, the first investment strategy I recommend is index funds and ETFs, also known as exchange-traded funds. These are low-cost, low-risk options that allow you to invest in a broad range of companies, industries, and even countries. Think of them as a basket of stocks. For example, you can invest in the S&P 500 index, which tracks the 500 largest US companies like Apple, Amazon, and Tesla. By doing this, you're not putting all your eggs in one basket, and you're spreading your risk across the market. Over time, index funds and ETFs have historically delivered solid returns, around 7% to 10% per year on average. Now, if you're asking, how much do I need to get started? Here's the good news. Some ETFs have low minimum investments, so you can start with as little as $50 to $100. Plus, they're great for long-term investing, which is key for beginner investors in 2025. Dollar cost averaging, DCA. Next up is a strategy called dollar cost averaging, DCA. This is a super simple yet powerful strategy that minimizes risk and takes emotion out of investing. Here's how it works. Instead of trying to time the market by guessing when to buy or sell, you invest a fixed amount of money at regular intervals, say, every month. For example, let's say you decide to invest $200 every month into an index fund. Even if the market goes up or down, you're consistently investing. And, here's the cool part. When the market is low, you buy more shares, and when it's high, you buy fewer. Over time, this helps you buy shares at an average price, which reduces the impact of short-term market fluctuations. It's kind of like setting it and forgetting it. No need to panic when the market goes down. Instead, you're building wealth over the long term by making consistent investments. So, what's the takeaway here? Consistency is key. Strategy 3. Invest in what you know now. This next strategy is one of my personal favorites. Invest in what you know. This is about focusing on industries and companies that you're already familiar with, making it easier to understand and follow their performance. Let's say you're passionate about tech and use a lot of tech products. Companies like Apple, Google, and Microsoft might be good places to start. Since you're familiar with their products, you can make more educated guesses about the company's future potential. Plus, when you invest in something you know, it's easier to stay engaged and patient during market ups and downs. Remember, investing isn't about gambling, it's about using your knowledge and research to make smarter decisions. If you're passionate about a particular industry, that passion can turn into strong long-term investments. Robo-advisors for hands-off investing. Lastly, if you don't want to spend too much time researching or managing your investments, robo-advisors could be the perfect fit for you. Robo-advisors are automated investment platforms like Betterment or Wealthfront. You just answer a few questions about your goals, risk tolerance, and time horizon, and the platform takes care of the rest. The beauty of robo-advisors is that they automatically invest your money in a diversified portfolio, and they rebalance it over time to maintain your risk profile. So, if you want to get started without a lot of guesswork, this is an excellent hands-off solution. You can typically get started with as little as $500 and enjoy low management fees. It's a great choice for beginners who want to keep things simple and still get exposure to a variety of assets. So, to recap, Here are the 4 investment strategies to keep in mind as a beginner in 2025. Index funds and ETFs, a simple way to invest in a broad market. Dollar cost averaging, a strategy that makes investing less stressful and more consistent. Invest in what you know, focus on industries or companies you're familiar with. Robo-advisors, a hands-off, automated solution for beginners. And remember, investing is a long-term game, so take your time and stay patient. With these strategies, you're well on your way to building wealth in 2025 and beyond. If you found this video helpful, don't forget to hit that like button, and share it with your friends who might also be looking to start investing. Drop a comment below and let me know, which investment strategy are you most excited to try in 2025? And if you have any questions, I'd love to help. Also, if you're new here, be sure to subscribe to PocketWise Tips for more easy-to-follow financial tips and strategies. Thanks for watching, and I'll see you in the next one. Happy investing!